What's up, everybody? You guys are welcome to this channel. This will be my first ever video on YouTube, and I'm curious about how this will even come out. So let me introduce myself. I'm Emmanuel, and people call me Emmanuel. So you guys will pardon the way I sound. I've been battling with some health issues, malarias, catarrh, and everything. So I just want to make this video because I've promised to record the video and drop it very soon. So I don't want to disappoint anybody, and I want to maintain the consistency no matter the way I feel. So that's why I'm making this video right now. So yeah, it doesn't matter the way I sound. All that matters is you guys can understand and hear what I'm saying. That is it there. So let's get right into the video. So now this channel is for people who are tired of guessing, who are tired of random entries, who are tired of getting confused anytime they open their chart. So in this channel, I'll be focusing more on teaching you guys structure, liquidity, key levels, point of interest, how price deliver from one key level to another key level, just understanding generally the price movement. That is what this channel is all about. So if you are ready for me, then I want to see your comments in the comment section telling me that you are ready. So let's get right into the video. So this video, I'll be talking about directional bias. Directional bias. So directional bias is one of the most important concepts in trading, and it's also one of the most misunderstood concepts in trading because we always say directional bias, directional bias, directional bias, but the thing is, it just only means one thing: direction. A lot of traders now are not losing not because they don't understand their entries. They understand their entry models, but they are losing because they are entering against the direction of the market. And as a trader, if once you start to trade against the higher time frame trend, then trust me, at that point there's no decision you can ever make that will be right. Even your perfect entry at that point will be wrong because you are not trading in line with the direction of the market. So that's what we are going to be going over today. I'll be going over explaining how I get my directional bias step by step, the way I'll be teaching it in a classroom. I want to make it very simple. So what is directional bias? Directional bias simply answers one question: direction. Where is the market likely to go at any point in time that you open your chart? Are we likely to go up? Are we likely to go down? What kind of formation is the market printing at that point? Is market printing higher high, higher low, higher high, higher low, higher high, higher low, higher high, or market printing lower high, lower low, lower low, lower high, lower low, lower high, or at that point? So you need to understand and determine the kind of directions or the kind of formation the market is printing at that point. Now, as a trader, before you even try to get your buyers in the market, you need to first understand something. Number one, the first thing you need to understand is the market structure. Then number two, you need to understand the time frames that you are going to be getting this bias from. Then number three, we need to understand the key levels, key levels / POI. Let me just say it, let me say it that way / POI. So these are the three things that you need to understand whenever you, as a trader, you want to understand or you want to get your bias right. Now, the first thing, market structure. What is market structure? Market structure is the same thing as the direction of the market. It is the formation in which the market prints on the chart. Whenever the market is pushing to the upside, there's a formation is follows, and also whenever it is pushing to the downside, there's a formation is follows. And we know that we have three types of trend. We have uptrend, downtrend, and when market is not committed towards the direction. But we as a trader, we are only expected to find inside of two trends, which is what is either we are inside this the downtrend, or we are found in an uptrend. We must not be found in when market is not committed to the direction, when market is consolidating, because this is a point where you are going to be losing a lot of money. This is a point of indecision in the market, and you as a trader, you want to stay away from this kind of market condition every time. So that's it about that one. So let's get into the structure properly. Now, in this video, I will not be able to teach you how to mark structure properly because as a trader, I expect you to understand how to mark structure properly. That is the first thing. I expect you to understand how to mark structure properly, because if you can't mark your structure properly, then trust me, there's no way you can get your bias right. Structure is bias. Whenever there's no structure, that means that there's no bias. And whenever there's no bias, that means that there's no confidence. And whenever there's no confidence in the market, that means that any trade that are going to be taken at that point is just trading up. You're just hoping that, okay, I hope the market will react to this point. No, you have to make sure that the structure is showing you something before you can actually say that, okay, this is my bias, this is my direction for the main time, for 1 month, for 1 week, for 1 day, or anytime thereabout. You understand? So that is structure. Now let's get into this. So I'll just be streamlined. I will make a video properly on structure. We'll be talking. I'll teaching you guys how to mark structure properly, and also how to understand the phases of market structure. But in this video, I'll just be assuming that you understand structure. Then I'll just continue my video. Now, as a trader, you know that whenever market is committed to the direction, whenever market starts to print to the upside, something like this starts to happen. We know that at some point market will definitely come back to take out the previous high. I want you to follow me closely. At some point market will always come back to take out the previous high. Same thing as this point, market will always come back to inside of this range again and print a previous high. You just know that at some point market will definitely come back to take out this previous high here. This is it here. And this will keep going on and on until you see that market violates maybe the rules of this uptrend. Something like this has to keep happening. Something like this has to keep happening. Market has to keep breaking the highs to the upside. Now, you as a trader, you are only expected to trade, like I said, in line with the direction of the market, which means that whenever market is trending to the downside, you have to follow it to the downside. Whenever market is going to the upside, you have to follow it to the upside. Now, understanding this, that means that this is just the same way we are going to be looking at ebb structures on all this time frame. Same as downtrend. Whenever market starts to print a lower high, market will print a lower low. Then again, market will always come back to take out the low of that trend, because this thing is dropped to the downside. Sorry, this thing is dropped to the downside, and we have to market has to keep breaking to the downside so as to maintain this trend. So again, if market should come back up, what do you expect again? Market will always come back to take out this low again. So this will keep happening over and over again until market decides to violate this trend. So if you see a break of trend like this, that means that now market is has shifted direction to the other direction, and now we can actually look to trace to this side like this. Just trace to this side like this. Now, these are the concepts you need to understand before you even get to the chart. Just the basics of market structure. Just understand the basics of market structure. Whenever you get to the lower time frame, that's when you start to understand all these liquidity and stuff. But on the higher time frame, just work with the basics of market structure, because this is the higher time frame, and market will always react to something there. On the higher time frame, market will always react to the POIs there, everything that is there, any obstruction, any key level. Market will always react to those levels on the higher time frame. So we are only expected to just mark the basics on the higher time frame. Now, understanding that, let's say you have this, understand the structure properly. Like I said, after this block of structure, so now let's say you have your POI, let's say your key level, let's say this, you have another block at this point, or you also have another block inside of the midline here. Then you're expecting the market should come back here. There will be a trend that is approaching this POI, something like this will be coming down like this. Now, until market gets to that POI, you are expected to just follow that trend back to the downside. You are expected to follow that trend back to the downside, something like this. But this is what's coming from the higher time frame, not on the lower time frame. I will talk about that when we get to the time frames point. So this is it. You are expected to trade in line with that direction. So which means that when market break out of that high, here, it means that now your buyers are shifted from this trend until immediately you saw something like this happen, maybe on your another time frame, something like this happen. You know that now you are now bearish until market gets to this level and shift character or change trend towards the upside again. So what I expect to do is keep waiting for market to come back out of this range, drop again. You have to keep selling all the way until market get to this point and maybe shift character, or maybe market continue back to the downside and do something like this and tap into this level and shift character like this. But before market gets to that point, you are meant to what? You are meant to keep selling. You are not meant to buy at that point anymore. You are not meant to buy at that point anymore. And once market did something like this, shift character again at this point, what are you meant to do? This is our previous high at this point. Now you are meant to what? Only what? Buy. Now that is your direction that you're going to be trading towards at that point. So this is it. Just keep what? Waiting for market to come back here, you get your buy. Again, wait for market to come back here, you get your buy. You get your buy until market what? Eventually take out that high at that point. Now again, once market take out that high, you know that market will eventually come back inside of the range again at one point and give you your entry. So now, because it's happening from the higher time frame, you can actually go to maybe the 4H to go and look for something like this and start to ride it back inside, maybe to the premium, the discount, or the 50% of the discount and the premium. Then once market get back there, you stop selling. You wait for market to tap into a key level, maybe a POY. Once market tap it and you see something like this, now your buyers are changing again. You have to what? Keep buying again. Keep buying all the way to the upside again. Keep buying all the way to the upside. Now this is just what? Following the basics of the market structure and also working with key levels. That's it there. So once you understand how to restructure, this should not be difficult for you. Now let's get to the time frames. You know, for me, I have 3 time frames. I have what I call higher time frame. I have what I call number 1, higher time frames. I also have what I call the medium time frames. And I also have what I call the lower time frames. Now these time frames are there to guide me throughout my bias, throughout everything I'll be doing in the chart. Now this higher time frame is responsible to divine my bias. This time frame is responsible to divine my bias. So we have this coming, sorry. So it's responsible for my bias, and this one is responsible for my setup. Why this one is responsible for my what? For my execution or my entries. Yeah. So which means that I'm only looking for my bias on these time frames. This higher time frame, I'm looking for my bias on my setup on this medium time frame. Then my lower time frame is entries. Now let me just give you guys the time frames there. You can go and work with these things. I'm giving you guys this for free. I just hope my sister will not be mad at me. So we have 3 months, we have monthly time frame, we have 1 week, we have 1 day. These are my higher time frames. These are the time frames I get my bias from. And also we have the medium time frame, which is what? The 4H. So I just use 4H for that. Then also the lower time frames, I use what? The 15-minute time frame. 15 minutes, sometimes 30 minutes. Though this is just the 3 time frames, I use 45 minutes as well. Why for this one are 2, 4H, 2H, and also the 1H, which is the 1 hour. These are the time frames I use for my to get my setups every day. Then I'll use this lower time frame for my entries. 15 minutes and also 5 minutes. Well, I only use 15 minutes whenever my entry is not clear. On the 15 minutes, I'll use 5 minutes then, just to see what is going on at that point. So now these are the time frames. Now what I always want to see is that I want to see at least that okay, this bias and these setups are aligned. Now this is it. Your bias on the higher time frame and your setup must be aligned. So let's say if you are expecting a bearish momentum, on the higher time frame. Once you drop to the lower time frame, you must not look for bullish momentum or bullish setup. You have to look for a bearish setup as well. A bearish setup, something like this on the lower time frame to continue that direction that you are expecting. But if your higher time frame bias is bullish, then you jump into the medium time frame to start looking for bullish setup. That means you are trading against the trend. So if this one is bullish, this one has to also be bullish. So now let me just explain that properly. I'm struggling. I'm very sorry that I'll just make a proper one, don't worry. But this one I understand that you guys understand it. But let me just continue the video because honestly I'm just struggling with this recorder. Yeah. So now let me get, so let's say you have your higher time frame like this. Let's say you have this there's a setup on the higher time frame, you have something like this. Let's say there's a break of structure on the higher time frame, something like this happen. Now what is your bias at this point? Your bias is what? The market has a broken structure now. Now let's say there's a key level. We are going to be talking about that. So let's say there's a key level to the left hand side that you're expecting that, okay, this key level should give me what? Something like a pullback, a pullback inside, a pullback back to this range. Yeah. Now let's say there's a key level at that point. Now what are you going to do is what? You go to your medium time frame, which is your 4H. You understand? Your 4H. You go to your medium time frame to look out for something like this happen. Something like this should happen there. Now this is it. You are only going to be looking at for what? Your medium time frame. Now once you get this, now that means that this bias is now what? Is now confirmed. Your higher time frame, because you got this break of structure to the upside. You are expecting that this should give us what? This is a bearish bias here, because you are expecting that this POI or this key level should be able to like push market back to this point. Now your medium time frame, like I said, should be able to align with that what? With that higher time frame bias. Now this is it here. You see that we now have a break of structure to the downside, which means that you can do something like this. You can start to only sell on this lower time frame. Sorry, on this medium time frame. That's where you are going to be selling. You're going to be only selling on those medium time frame, because they will define your setup. Now once market gets to maybe the order block or the breaker block here, you can now go to the lower time frame to get your entries. But this medium time frame, 4 hours, 2H, and also 1 hour will be the one to define the setup in line with the higher time frame direction. Now until market get to maybe a key level here, or maybe the premium and discount level, for this case now it will be the discount level. So the market should get here and then do something like this on the medium time frame, not the lower time frame. Let's say the medium time frame. That's when you can see that, okay, now we are now what? Going back to what? To take out this high. Same thing like this again, because you just keep buying, until market take out that high at that point. And this is what we are going to keep, like this is what we are going to be doing. These are the higher time frames. You read your structure on this 3 month, the monthly, the 1 week, the 1 day. Then you jump into the medium time frame to get the setup that is in line with the direction of that trend. So which means that when the market is at this point, let's say this level now, let's say you have your let me just draw it properly there. Let's say you have something like this on the 3 month time frame. There's something like this happen. You are expecting the market should come back and take out this high. That is the bias. Yeah, that is your bias. Your bias is what? Is market to eventually come back and take out this high. So what you are going to do is what? This is on let's say this is on the 3 month, or maybe the monthly or maybe the weekly. So you go to the 4H to start to look for what? To start to look for structure to continue that trend until this is what you are going to be looking at for. Something like this on those time frames until market break what? Structure. You are not meant to what? You are not meant to sell at that point, because you are expecting that this is your bias, this is your target, this is your next drawn liquidity, and you're expecting the market should come back and take it out. So you're only meant to go to the lower time frame to go and look for setup in line with that direction to take out that high. So let's after market break that high, now that's where you can now say, now okay, the bullish bias is has ended. You look out for the left hand side to look out for a key level that can actually facilitate that pullback inside of this range. Once you get to that range, let's say you have a key level at this point, again market do something like this, then you start to what? Do something like this again, same thing. This is what you just want to keep doing. Same thing as downtrend. Let's say you have something like this in a downtrend. Let me just quickly do the downtrend before I move on to the chart and just show you what I mean. So let's say you have something like this on the downtrend, the market starts to drop like this on the lower time frame, which is on the medium time frame. You have your low here. The market will eventually come back to take out this low. If market should maintain that downtrend, market will always come back to take out the low, which means that you just have to go to your medium time frame, which is on the 4H, to start looking for what? Structure in line with that direction. You only want to trade in line with that direction. You only want to trade in line with that direction. I hope you guys are understanding this thing I'm teaching right now. You are only expected to trade in line with that direction. So now, which means that this is it. We have what? A low, go to your lower time frame to what? To start looking for structure in line with that direction, and that is it. That's how to do it. So now, immediately market break out of this level, Now you go to the higher time frame, you mark out your POI. Let's say your POI is aligning with this point there. Let's say your POI is here. Now you look out to the left hand side to look out for maybe a key level that can actually facilitate that movement back to that direction. So now where's the target? At least maybe a liquidity level. Then you go to your medium time frame again to look out for something like this to happen, or maybe a failure swing. So if it's something like this happen, the market just do something like this, then fail to create the low, then start to break to the upside. You can actually start to trade from here to what, until market take out your target. You have to keep what, buying, only buys, only buys until market take out this level. This is just a simple definition, or this is just a simple way of getting your buyers. There's no like nothing else that nobody should tell you otherwise. If anybody just telling you to go and draw a line, maybe something like this, just draw a line, nobody, that line will just fail you. So that's it there. So this is how to just get your buyers. Now key levels, that I think I've talked about that already. Understanding your key level. So your key level for continuation, and also your key level for pullbacks, which means after a break of structure, you look out for the closest POI or closest key level after that break of structure that can actually facilitate what, that pullback towards that point. Because on the higher time frame, market always reacts to all these higher time frame key levels. So you need to be very wary and crucial. It's crucial to understand where these things are aligning on this higher time frame. Now let's get to the chart and let me show you there. So let's work with, I think this is GJ. So let's go to 3 months. That's the first time frame you have to go to. Yeah. So let's say market is at this point. Let's say market at this point here. Let me just cut this off. Yeah. So let's say the market is at this point. Now what do I say? You have to reach your structure. So once you understand the structure, then you know that okay, this is what is going on. Now for this structure, you can see that on this 3-month time frame, market fade to what? To close below this level, which means that this is not what? This is not a valid break of structure. This is not a valid break of structure, and now this is what, a failure swing. We call it a failure swing. If you know how to read your structure properly, if you know what I mean, yeah. This is a failure swing, and which means that this R is not strong because it is unable to do its job, which is to close below this level. Now that is your target already. You know that okay, market should end up coming back here to come and take it out. Now what do you see? The market tries to break again, but market failed to break, closing with another week again. After closing with another week, you can see that this is what market then change character at this point. After market change character, what do you see? Market then did something like this. Came back to this other block. Now where is your target on this time frame? The first target will be here. This level is your first target, and this is your overall target. But like I said, in this on this level, you have to look out for closest POI or closest key level that can actually cause that pullback. But let's say when market break out of this structure, now you could see that market reacted on this other block or this level here. Market reacted at that point to facilitate that pullback to this level again, to facilitate that pullback to that other block. And now market started to again to take out the level. So you go to your multi time frame to read the structure. Now you already determined your higher time frame buyers, which means that all you need to do is look out for structure to take out this level. You look out for the structure to take out this level. That is what you expect to do at that point. So now let's say on the monthly time frame, you have to refine, because it is refine it here. Now go weekly, read the structure properly at that point. On this level, you see that we have a change of character at this point. A change of character. Then where's the POI? We have our POI here. The market did something like this, and you can see again, immediately market give you that POI on the weekly, because it is come from the weekly time frame. Mark out another key level that can actually push this market back to the downside and facilitate the pullback. You see market first reacted on something here, come back to the level again. So what do you see at this point? Market started to follow a trend. This was a break of structure. The market came back to the other block again, same thing, other block, same thing, other block, same thing, other block, until market get back to maybe your POI here. As you can see, the market eventually come back to that POI. So you'll have gotten a lot of entries at this point, and I expect you should understand your entries already, but I'll be making another video here on this channel. You just have to stay tuned. But this is just about getting buyers. Can you see that you're just selling at this point? until what market gets back to this point. So now you're expecting the market to change character, then continue to the upside at that point again. But yeah, when market get to this point, you could have go to your lower time frame, which is on the 4H, to what, to actually start to buy. Do you understand? To actually start to buy at that level. So now what do you see? Immediately market get to that point, where is your high at this point? This is the last break of structure. Then what? Market then broke structure at this point. Then what came back to this level to start to give us our entry to the upside. Now this is how you could have been getting those entry. Market came back to this what breaker block again, using this as a liquidity. They started to buy to the upside. Started to buy. You can see that the market started to buy, giving you all those buy entries. Let's have another buy at this point. Give you all those buy entries. Just what? Only buy. At this point now, you're not selling anymore. You are not selling anymore. You understand? You're only meant to what? Keep buying until market what fulfill what that mission on the higher time frame, which is to take out what is either this high, but on the weekly time frame, where is your target? The first target on this weekly time frame is this level. Is this level. But now, in a case whereby, so let's see what will happen at this point. So if market should break out of this high, then that's when you now see okay down. But in this case, as you can see, market failed to break out of the high. The market gave you what? Another change of character on that lower time frame coming. Something like this happened again. What do you see? Market break out of that trend. Market broke out of that trend, then give you a change of character. They start to drop to the downside, start to give you sells again until market came back. You know that means that on that weekly time frame, like that I said, that you need to understand your structure properly. You understand? You need to understand your structure properly, because this level, this low now, failed to do its job at that point. It failed to do its job, which is to take out this high, which means that if market is coming back, if market should turn back at that point, market will eventually take out this low. That is the technical, that is the technical logic behind all this structure. Now, let's see at that point. Market came back, sweep below, then started to push it to the upside again. Why is this thing slow? I don't want this to be really slow. I want it to be at least fast. And now at this point, you start to what? You start to look for, after market sweep that low, you start to look for what? Again, you start to trade towards that direction. Now what do you see? Market then what? Eventually, after taking out that low, market came back. Let me see if I can see a refined zone here. But yeah, market just came back there, just sweep below on that time frame. You see on the weekly time frame, you see market just swept that low. After market swept the low, what do you see here? Market then closed back inside. So immediately you saw that thing happen for that week, you know that okay, now you go 4H, which is what like that 4H will be the one to define that setup. But okay, this is what is going on. And what do you see on the 4H? What do you see on the 4H? 4H shifted character at this point. We have what? The first, this is not a clean break, but the first break and also another break to the upside here. This is a double break. Then what do you see? Market then came back inside of this level and tap into a level at this point and start to what? Give you another buy, another change of character here. Tap into this level. They start to give us what? Those buy entries to the upside. Those buy entries to the upside. Also following the day time frame order flow. You see, after a break of structure, this is on the higher time frame now. You see market reacted to what? A breaker block to facilitate a pullback inside of this level. So now, if market tap into this level, you can actually go to what? Maybe the 2H to look out for some kind of change of character at that point. 2H to look out for some kind of change of character at that point. And what do you see? Market then change character at this point. After changing character, market tap into this other block. They start to drop. Then start to what? Start to drop to the downside until market get back here again. If the market get back to that point, market then give us another change of character at this point. There was a failure swing here. This high failed to create a new low. The market just did something like this. Then push to the upside. The market started to give us the moment, like the trend to the upside. Break of structure, came back to the other block. Break of structure, came back to the other block. They started to give us now until market get back to that high. Take out that daily high. Here, which is, let me see the daily high. Let me see. Once market get back to take out this that daily high, this one, you are only what expert to what to keep looking for buy setups, buy what setups. Market came back to this other block after changing character here, break of structure again. Now where's the other block? Market came back to something here, using this as liquidity, then started to what give us structure. But you know that okay, this is where market is heading to. So just go to this 4H to start looking for how to get these entries. So start looking for how to get these entries. So this is it here. So market reacted on something on this breakout block here, then give us a change of character, come back to the other block, keep giving you entries to the upside. This is another entry, this is another one here. We also have a re-entry here. We also have another one on this breakout block. The market break structure again, came back, give you another entry at this point. Now can you see how many entries you will have gotten? See one buy here, 2 buy, 3 buy, 4 buy, 5, 6, 7, and you could have even gotten like sells here when market was breaking structure to the upside and tap into their daily breakout block. You could have gotten that sell again to come back to this level. Then after changing for after again, got some sells. Because if you go to this time frame, let's see where that pullback was coming from. This little pullback, you can see that it was coming from this level, this other block here. And if you go to that 4H, you could have gotten that little sells again. Yeah, can you see? You could have gotten that sells a little bit there. See the market change character at this point, then what gave you something here. Then this is why you could have, if you jump to the 15-minute time frame now, you start getting those entries. This is like more than 5 entries at this point. We have the first one here, tap into this level again. We have one here on the lower time frame. This is it here. Can you see? These are many sales. Now where's your target on this level? This will be your target at least. You expect that market should target your previous low will be your target. Now that's another entry. Then this is another one here. We have break of structure. The market came back to this other block. So this is 1, 2, 3, 4 entries. Just sell. Or market tap into this level. Once market tap into that level, you wait for another change of character again. Maybe market change character at this point. What do you see? Market then came back to this other block. That's the first entry. Another break of structure. Where is our target? And the market came back to this other block. Now the first target will be here again. Can you see? This is the first target to take out. So we have 1, 2, and on lower time frame you could have gotten more entries like to take out this target, and that's how you could have just again you wait for market break structure, market tap into this level again here, market shift character on this time frame, came back to the other block, you start to get all those buy with your entries if you know how to get all these entries. SLP, we have a break of structure on the lower time frame, something like this, come back, the first pullback again, maybe jumping on a breakout block or other block, and that's how you could have been getting your entries. So this is just a simple way of getting your buyers. Now let me clear this out. Now another way of getting buyers is this: you can use trend levels. But my trend levels, I want to see more than 2 breaks first. I want to see more than 2 breaks first. When I say 2 breaks, 2 points touched first. So a trend line has to something like this has to happen. We have to see 2 touch, 1 then 2, something like this, before you can actually consider it as a trend, as a valid trend line. Something like this has to happen. So you have to see the first touch, the second touch, and the third touch, which means that you have to work with structure first. So there must be a break of structure at this point. Now if market is not coming back down, so you cannot look out for which POI or which key level is aligning with this trend line. So market will be coming at something like this at that point. Market will be doing something like this here. So now let's say at this level now, where is aligning with this point? Let's say there's something here that is aligning with this trend line. So that's where you're going to be looking to trade from. So you look out for on the medium time frame to start to take out the high again. Now that's what you can do. So this is something that you just go to your chart and go and practice it right now. Go to your chart and go and practice it right now. So now in this case, you can see that market started to push to the upside after market came back to the other block. Market started to push, broke structure at this point, came back towards the other block. Now immediately market started to come back to this other block. Where will I have gotten your entries? Got refined the lower time frame. Now this pullback that was coming back down, these are points that facilitate that pullback. These are breakout blocks See this breaker block here, facilitate the pullback, giving us how many pips at this point. This is how many pips. This is 1008 pips. Can you see that these levels, all this POI, like I said, all these, any point of interest on this lower higher time frame are there to help you with your pullbacks. They are there to what, give you those pullbacks to come to back into this your time frame. After the break of structure, market then did what again? This is also what, a level here. So as the market get back there, gave us another what, movement a little bit. This one is not much. Give us 1000 movement at that point, 1000 pips movement. The market then broke structure at this point, then came back to what, the order block again. So after market came back to that other block, the other block was here. Now where's your target again? This is it here. And what do you see? What do you see here? Market then what, change character at this point, change character. After changing that character, what do you see? See this breaker block that facilitate the what, the pullback into what, the other block here. This breaker block won't facilitate the pullback into the other block there. So this is how you could have been getting your entries at this point. You'll have started to what, get those entries back to this level. If you go to the daily time frame now, you see that that level is like very clear coming. This is what, very clear here. Can you see? Break of structure, come back to the other block, break of structure, come back to the other break of structure. Make market tap into this level, go to your 4H, then what, you start to get those entries again to buy again. To buy. When you see change character at this point, came back to this other block, they start to what, give us entries. Give us entries at this point. Give us entry at this point. Change character, give us another entry. We have a lot of entry here. See entries here. We have entry, another entry here. Yeah, market tap into this breaker. Another entry at this point. Sorry, somebody's calling me. Another entry at this point. So that's it there. So that's how to get your buyers here. You understand? Now, I want to see that. See how many buys we will have got. Like I don't want to waste time here, a lot of time here. So we have what, another buy. Just after a break of structure, come back to the other block. Another one. Yeah, marketing came back again. Tap into this, sweep this low, come back to this level. They start to give us another entry to the upside. All these entry, I got all these entries, all these buyers in here. This sell setup as well, I got it from the daily time frame because, like I said, your hour time frame are also responsible for what, for your pullbacks. Can you see here? See this one here. This this one was responsible for this pullback. This is as liquidity responsible for this pullback into this level. Again, tap into this level, got our structure to the upside. Now see structure here. We have this break on the upside again, break to the upside. Another one. This one that is happening just now. After market broke that structure, what do you see? Market fade. We are expecting the market should react on this POI here. This one here. But you can see market is here to break any 4 hours low, so we cannot force our buyers on the market. So now as you can see, market when market get back there on the 4H, market is here to break any 4 hours low, but market still continue to buy. Market again bought on this other block, and now if you go to the lower time frame, that's where you can have gotten your entries, all your entries from again. What do you see? Market came back to what, a 1 hour breaker block at this point. Then what, dished out the profit again. Market then came back to it, also what, this breaker block here on the 15-minute time frame. That's how you could have gotten those entries here. See where it is aligning with here. This is it there. Now that's entry to take out what, this high. So that's what, how many entry? 1, then what, 2 entries to take out a high. Let's say you are here, you will have actually maybe gotten your first entry here. Okay, this IC market, there's a broker that showed every price action here. So you have gotten a change of character here. Market came back, they start to what, buy from that point. But let's say we do not get that. This is 1 entry, and what, second entry. This is also another entry here though. They have 1 here too. Using this what as a liquidity. This is 1 entry as well here. Market shifted character at this point, shifted character here. Then use this as what, the liquidity, tap into this other block and start to push the upside. This is another entry. So that's it for that. I think, let me see how many minutes into this video. this 39 minutes. So you guys, I think you guys should understand how to get your buyers now. Now, whenever market breaks structure now, so let's say if market should break this structure, now, what are you expected to do? Break the structure properly. You are expected to what? To look out for what? Because this is coming on the 4 hours. Go to the higher time frame. Look out for maybe a closest POI or closest key level that can actually cause a pullback. Coming. Let's see what can actually cause a pullback here. Right now, you can see there's nothing here, so that means that just leave it. Just wait for market to come back into the range, come back into what's inside of the range. Then you wait for come back inside of the range. Then you do something like this. Come back here. Then you start to trade again to the upside. But this, because nothing is showing you that it can push it now, you cannot just blindly look out for change of character and start to say no. You have to wait for market to come back here, give you something like this on the lower time frame, then you start to trade to the upside again. But let's say in the case whereby there's something there at the left hand side, you just wait for what on the maybe 2H, 4H, 1 hour, something like this will happen. Then you start to trade from there until market get to maybe this is your POI. You start to sell until market get back there, take out the low, maybe a low that's closest to that POI. Then once market taps to this level again, you are not selling anymore, you are buying. You are only meant to what? Keep buying until market take out this high. Same thing and same cycle keep going on. Once there's nothing showing on the other time frame, you are not meant to do anything. Once there's no structure confirmation, there's no buyers. Like I said, once there's no structure, there's no buyers. And always make sure that your higher time frame and all these your medium time frames are in sync, are aligned. If your bias is bullish, let your these time frames also be bullish. If they are bearish, then these ones be also bearish. So yeah, I think that is it for this video. So my next video will be on market structure, how to mark structure properly, because I know that a lot of people are still finding it so difficult to mark structure properly. But use this as a guide with your directional bias. Then you get, once you understand how to mark levels, you can see. So this is it. Market eventually come back to take out this eye. So we are heading for what? This next eye, which is this one. Yeah, that is the bias here, because it failed to take out this low. So which means that you go to a lower time frame, you keep looking for what structure to take out that high. That is your bias now. Break of structure, want a pullback inside to come back to this other block, because as you can see, market has been respecting other blocks. This one as well, other blocks, but market leave out this one. So this means that this other block is still valid at this point. But yeah, you can see the market break structure again, give us another block, then tap into the other block. Now we have expecting the market should come back to this other block again. So we are expecting a pullback again. So once market give us that structure confirmation, maybe in 4 hours, you see a low gone, we start to look for what? We start to look for sell. Until market get back here, then we start to look for buy. Market take out this level again. Look out for maybe this other block to facilitate another pullback again, to come back to the level here again. Buy until market take out the high. As simple as ABC. All you need to understand is structure. So that's it for this video, guys. I'm very sorry because I was just rushing this. I'm not feeling comfortable at all. But yeah, I hope you guys should understand everything I've been discussing in this video. So that's it for this video, guys, and I'll see you guys in the next one.